Hey, everybody. Monday, March 6th. Lovely day in the market. As far as I'm concerned, they're all lovely days. Promise to go over each one of the days individually. What you're seeing on the screen here, from red line to red line, this is the full movement of Monday's micro S&P chart. I'm doing the micro S&P. Once you learn how to read these charts, you can trade anything. Price moves identically across all charts. Just to give you a brief update, brief review. Background color green, momentum is down. Background color white, momentum's up. Blue bars, price is closing higher than it opened. Green bars, price is closing lower than it opened. Excuse me. Red bar, price closed at the exact same price that it opened. And see if we have an elusive black bar. There's a black bar right there. The black bar is where you have a labeled oscillation, both at resistance, top and bottom, on the same bar. Those are all the components of the chart. I mean, in a nutshell, those components are labeled on the chart. They're labeled and the information comes directly from the bars themselves. There's no outside indicator applied to the chart to be able to give you all of this. Each one of the labels appears on the chart as soon as it's confirmed. So that label right there, that P for price failure, is confirmed, and that label appears as soon as the bar following it closes. That confirms that that 3-bar process is complete and that the low of that bar right there is a price failure. This is a price failure P. This is a failed oscillation. That just means that it broke through the previous price failures, but it didn't make a new low compared to the previous failure. The ends are new highs or new lows. Those are the components. That's your review. Now, when you're using the GUI, the easy way to use it, okay? I mean, there is a step-by-step process, bar by bar, to take every single trade. But an easy thing to just remember is that when, wherever your momentum is, whether it's green and down or white and up, you're just looking for confirming oscillations. You're looking for support to give you a price failure or a failure, or you're looking for a reason here to buy where your target is a new high. You're trading, from a failed support, trading back toward a new high. Just think about it as a ball bouncing off of the floor, and it's trying to reach its apex. The apex in the case of our charts is the last new high or the last new low. So we see that, I always go by 8:30 in the morning. That's when the market starts picking up, at least the S&P does. So you see that, right after 8:30, you got a color change. Okay, great. I'm looking for a buying opportunity. Well, there's my price failure. As soon as that bar right there confirmed, it confirmed blue. So, we have white background color. Great. We have, confirmation bar is blue. And we have a target oscillation as a new high. That would be your first confirming oscillation of this long. I particularly like the failed oscillations, or usually when the market opens like this, we're going to get a little bit of consolidation. So I look for that as well. But we see what price does here. Now we're going to review all the trades. Comes down, gives us a failure, breaks through the price failure, gives us a confirming oscillation, again, back toward that new high. It goes up, but stalls by giving us more failures of support and of resistance. Resistance is creeping up, making new highs, but we get a failure in here. You can see this block the block that's happening right in here is consolidation. You see, there's not a lot of conviction to where the market is moving. Once it, creates or establishes this, run of new highs and then breaks out, then you have more of a push to the upside. And you can see that happen here. And the same thing on the downside. But you see how price moves, your confirmation toward a new high, breaks through here, confirmation, new high, confirmation, new high, confirmation. You're heading back toward that price failure. Price failure toward a price failure is consolidation. You have a little consolidation here. Once you get that failure, and here you've already matched that failure, you have a little bit of confidence that it's going to go higher, and it does. So let's look at the trades. There's all of your trades for the day. And look at the ones that we talked about. That first one out of the gate, losing trade. Second one out of the gate, losing trade. Third one out of the gate, losing trade. Oh my goodness. Well, where did those losses come from? Remember the consolidation that's occurring in here. Remember, we saw that there was no conviction out of that market. As soon as you got conviction out of that market, okay, as soon as it pulled out of that, you had a good trade, and then followed by a continuation trade, started to consolidate back on the top again. And another losing trade at the top. Now, losing trade here off of a 2-bar exit. I missed marking that. Coming from the entry there and then exit on the red bar. It was only a point, but I'm not going to adjust any of the totals, but I'll fix that. So it rolls over. Price goes up to challenge that new high. Beautiful. Picture perfect. Price goes up to challenge that high and fails. That's that failure up there, right there. When that bar closed right there and confirmed that as a failure, that's like somebody flashing a neon light at you, going, hello, McFly, here's a short. Afternoon session, nice. One drop, it goes into consolidation. You have 1, 2, 3 losing trades, a one winner in between, and then you go into the close, right before 3:30 with one more little loser. All the little losers were just little pings and dings. You ended up with 5 1/4 points trading from 8:30 till noon, and then you had, if you traded all day, you ended up with a total of 5 3/4 points all day. First off, it's Monday. Monday is suspect at best. I rarely would recommend trading a Monday afternoon, but if you do what you want to do, if you can read a chart, have as much fun as you want. Read and take as much money as you will at the market. I'm just showing you instances each and every day where it's going to be consistent. But you see, even here on a Monday, where you had consolidation in the morning and then consolidation in the afternoon, primarily because we've got a lot of news coming out the rest of the week, that the market's just kind of laying in wait to see what's happening. But again, still a profitable day. Again, this was March 6th, Monday. This is Price Physics. My name's Bill Shamp. I hope you enjoyed this, and we'll see you back tomorrow, Tuesday.